This daily market update has been brought to you by Daily Wealth Report. Trading involves risk of loss and may not be suitable for you. Past performance is no guarantee or reliable indication of future results. All advice and education content is of the nature of general information only and must not in any way be construed or relied upon as legal, financial or personal advice. Good morning traders and investors. It's Wednesday the 1st of August and we've seen a slight sell-off in the European markets and in the US overnight as investors just take stock ahead of the FOMC minutes meeting tomorrow and the ECB the following day. As you can see on screen here, the FTSE index was down 1% or 58 points, closing at 5635 and forming a short-term bearish pivot point there at the previous highs. So it seems to be that we're holding resistance about 5,700. The German DAX was down only 1.8 points. It was virtually break even. It did attempt to trade higher earlier in the session, but gave up those gains. Again, it's showing that weakness from the buyers, not showing much confidence ahead of the next 2 days to trade much higher than 6,800. And the French CAC 40 was down 30 points or 0.87%, closing at 3291. Following the FTSE index there, and it has formed a bearish engulfing pattern and holding resistance there at 3340. As we have a look at the US, the Dow Jones was down slightly. It lost 64 points or 0.5%, closing at 13,008 points, and it too is showing that weakness from the buyer activity. So what we'll need to see here is whether this breakout that we had from the resistance of 13,000, whether that is actually going to find some support there and renewed buyer optimism to form a new upwards trend. The S&P 500 index was down 6 points, 0.4%, and it too is showing a very similar picture to the Dow. It closed at 1,379. The Nasdaq index was probably the better performer, with technology stocks not selling off as heavily as the broader market. The Nasdaq was down 6.3 points or 0.2%. Closing at 2939. It is a short-term pivot point that is formed here, and that is a resistance level. So as a trading range, one would expect that this could retrace down to about 2,850 on the short term. What this has done for the VIX index is it has sent it up only slightly, not a strong shift in the VIX. It was up 90 cents or 5%, closing at $18.93. Again, whilst the markets retrace, this VIX index will continue to rally. If we see a negative reaction to the FOMC statement and no quantitative easing announced, then this VIX will pop up even further and should go above $20 on the short term over the next couple of trading sessions. A little closer to home, the ASX 200 index did extend its gains. The buy momentum has slowed somewhat though. It did gain 29 points, closing at 4274. We can see that extension of the short-term rally, but note how the candlesticks have decreased in size. That's just showing that there's a slowing buy momentum on the short term as the trend is accelerating. We will expect a short-term retracement. And with that in mind, the SPY futures are down 17 points ahead of the market open. If that does extend a little bit further, then we will have a short-term pivot point here. So anything below 4245 on the ASX 200 will denote a short-term retracement in play. So that's our update for Wednesday the 1st of August. We look forward to giving you an update again tomorrow.